Introduction to Key Terms Insurance. The topic of health and safety makes use of keywords and phrases. Some important definitions are: health insurance, the absence of disease or ill health. For example, asbestos creates a health risk because if you inhale asbestos dust you may contract lung cancer at some stage later in life, perhaps 20 or 30 years after you inhaled the dust. Health relates not only to physical ill health but also to psychological ill health, e.g. exposure to extreme stress can lead to acute mental collapse or a nervous breakdown. Safety. The absence of risk of serious personal injury. For example, walking under a load suspended from a crane during a lifting operation is not safe because if the load falls, serious personal injury or death could result. Insurance. Staying out of the danger area results in safety. Welfare. Access to basic facilities such as toilet facilities, hand wash stations, changing rooms, restrooms, places where food can be prepared and eaten in relatively hygienic conditions, drinking water, and basic first aid provision and insurance. The moral reason for managing health and safety. When health and safety is not managed properly, people can get killed and injured in gruesome ways or suffer terrible diseases that have a massive impact not only on them, but also their dependents, families, friends, and colleagues. This suffering is morally unacceptable on insurance. Employers, through management, control the premises, equipment, and working practices used by workers to produce the goods and services that the employer requires. Employers, therefore, have a moral responsibility to provide safe and healthy working conditions and insurance. The financial reason for managing health and safety insurance. Personal injury accidents, worker ill health and property damage cost money. When an accident or ill health occurs, there will be direct and indirect costs associated with that event. Some of these losses can be insured against, but many cannot. Accidents and ill health can significantly affect the financial resources of an organization and, in some cases, can put an organization out of business. This is the financial argument for managing health and safety. It is sometimes referred to as the business case because it focuses on money and insurance. When an accident occurs, the organization will face both direct and indirect costs. Direct costs: the measurable costs arising directly from the accident. Indirect costs: those which arise indirectly as a consequence of the event. Indirect costs are often difficult to quantify precisely and may be hard to identify. Examples of direct costs: first aid treatment and insurance, worker sick pay, repairs to, or replacement of, damaged equipment and buildings, lost or damaged product, lost production time while dealing with the injury and insurance. Examples of indirect costs: reduction in staff morale, which impacts on productivity, quality, and efficiency. General difficulties in recruiting and retaining staff as a result of the accident. Loss of goodwill of customers following delays in production and fulfilling orders. Damage to public image and business reputation and insurance. Damage to industrial relations, perhaps leading to industrial action, e.g. strikes. From the examples given you can see that, though more difficult to identify, the indirect costs associated with a workplace accident and insurance can be very large indeed.